Good afternoon. It's on a Friday. How do you like that? And it's the first week of February. If you go back to the first week of January, we had 8 out of 9 days up in the S&P, even though this is a weekly chart, but that's what it was. Now we're starting the new month out, and so basically what I want people to know here is that we called for a bear market reversal. As the long-term uptrend, when we broke below here, that's when we said that we were going into a bear reversal on the S&P. Go back and find it on YouTube. You'll find them a couple weeks ago, 3 weeks ago or so, and this is the 4th week straight down. We're violating the 100-week moving average. Prior to that, though, this line right here that you see my pointer, that's called a 100-week moving average. Even though that the S&P was going up, with that declining 100-week moving average, we said that this trend was not sustainable. It was good for a trade to the upside, but it wouldn't be sustainable for one reason. Because the longer-term 100-week moving average was declining during the up move, during the whole up move. It was declining in price the 100-week. Now you're violating that today. So once again, this was a lot of market noise and people wanting to buy in hope, and we're going to do this and that. Here's the reversal. And you can see when I bring over the S&P right here, down 14.68, led by the financials. We are also short that bull financial that we had put on a couple days ago, and then we held it overnight, and then they ran it back up, then they dropped it down. So financials got a big part of it. Dow transports are a big part of the sell-off. Technology, commodities, dollar's very strong. What matters, though, is the bear trend is in play. What the world will be looking at, as far as money managers go, is that they've been cost averaging down in the down move. There is no support to say that right there is 992 on the S&P, and that's roughly the 40-week moving average. And basically, any up move, like we said it would be, is a sell. Now, we are short the S&P, and we have the 1150 put contracts that we bought at the top of this move, and I'll show you what they're worth. We started buying these down here around $22 a contract. They're now $103 a contract, right up here. And when you understand market reversals and bear markets versus bull markets, that this here just continues to go higher and higher and higher. And what it is, it's an 1150 put that when we stop going up at resistance, we put this trade on. $105 a contract. These contracts are up $80. If you had 10 contracts, well, you'd be up roughly, about $90,000 to $100,000. And how many weeks? 1 week, 2 weeks, 3 weeks. So basically, welcome to stockmarketfunding.com. Join our professional trading school. Learn how to use our expertise to get these kind of moves. Call us at 702-685-0772 or go to www.stockmarketfunding.com. This has been a trade that was down here. That was the bottom of the wick. And basically, you can understand that you can make a lot of money to the downside in the S&P. You don't have to stay long like everyone else. And this weekly chart that I am pointing out to you is a full bear reversal trend once again. And we use the options. Learn how to trade the options. Learn how to short the S&P using S&P put options is the thing here. The kind of money that you could be made, look, it's not our fault you didn't do it, but we did have a lot of our people who are in that trade. There are times, as the rest of the world holds on for hope and hope, that you're on the other side of that and you're reaping the benefits. I can say that there's lots of other ways to play the downside of the indexes. This is just one that I was talking about. However, if we break below the 1049 handle that I talked about before, that's where this gap bar was, and it was on other charts. These are breaking points, these pivot lines that I drew here, these diagonal trend lines. But there is no support till you get down here. Now, that's going to be a good support level where people might feel that they want to move back into the market. However, you got some areas right here at the 1029 handle, 1023 handle, and a breach of that and a breach below the 1035 will send us down there. Stay tuned. Learn how to profit. We've got over 150 proprietary risk management tools that you can use in bear market reversals and profit huge.